I think that, we can all argue whether it's, say, the 475, she gave the range, 475 to 525. We're at the 475, so we're at the bottom end of that. The market has been bobbling around in between there, depending on the data on a daily basis. But so there's not a lot of disagreement on where we end up. But as you said, the biggest difference between my expectation, very similar to Mary's expectation, and the market is that we do think the Fed will need to hang out there for almost the entire year. We don't have them making the first cut until December 2023, whereas the market does have cuts earlier than that. But the market, you can see from risk premiums, the market is leaning more toward a recession environment next year, whereas I have a soft landing penciled in. And so it's all going to come down to what is the shape of inflation? I mean, inflation is coming down, but we think it's still going to be pretty high, and so that keeps them at that high level for longer. So
it's the considerations when it comes to inflation as opposed to, say, some kind of labour market shift that would set you in that view. But I've got to ask, though, because you're suggesting that inflation is going to stay higher for longer. What do you make of the fact that if we're looking at, say, for example, the housing market, right, and you would have this reasonable expectation that you are going to see housing starts pulling back, do you think that that's going to, because shelter is such a big component, do you think that's going to keep the OERs higher? Do you think it's going to keep the inflation rate higher, and that's where it's going to come from, or are you expecting it to come from somewhere else in terms of that stickiness?
Well, look, I think, so we think that rents and shelter have been peaking now, and that we do have a forecast that although it remains high, that it is gradually coming down next year. And I think we've seen a lot of evidence on the ground of that. Effective rents have been falling since the fourth quarter of last year. It just takes a while for that to show up in the actual data. Vacancy rates are up. There is, as economists, we're trying to forecast what the BLS is measuring because they put out the official numbers, and that's what the Fed follows. And so owner's equivalent rent is a bit of an odd measure, right? Because for rents, right, the BLS might call you, the landlord, and say, how much are you charging for that apartment for monthly rent? And has that changed? For OER, owner's equivalent rent, they call you, the homeowner, and say, hey, if you were to rent that house to yourself, what would you pay? And guess what? If we're in a weak housing environment or in a housing downturn, you're probably not going to give a very realistic view of what you could get in rent. So it takes a little bit longer for that part to come down. But Chair Powell spoke to this a little bit at the last press conference and said, but, we're going to follow the official data, and the official data hasn't really shown weakness yet. But we think that weakness is creeping in there. We think that it's going to be coming down next year. But that's very sticky domestic side of the economy. And I think that's going to be the biggest, that's the biggest difference of opinion in where we think inflation will end up versus, say, consensus. But it is coming down as the direction that matters.